Good afternoon, everybody. Thanks for joining us today for this webinar, which is all about coronavirus support and what's available now. My name is Andy Chamberlain. I'm the Director of Policy at IPSE. I am attempting to turn on my camera as we speak so that you can see me as well as hear me. Great. And if you could let me know that you could see and hear in the questions box, that's always very reassuring. And you can type any other issues that you might be having in there and we'll try to help. Also, please do ask questions. We actually have slightly less people on this webinar today than we've had on in the past, but that's no bad thing. That hopefully means that if you do ask a question, I'll actually have a chance to answer it, because recently we've had so many people on that it's very difficult to keep up with all that. So please do ask any questions that you have. And the only thing that will stop me from being able to answer it is me waffling on too much. So what I'd better do is just get on with it. This is it's quite dense, some of this stuff, but I should be able to get through it quite quickly. What we're going to be talking about is what's going on now with the Self-Employment Income Support Scheme. We're going to talk a bit about those who are covered by that, and of course those who are not, a little bit about what IPSE's done about that. We're going to talk about the job retention scheme and what that means for company directors, what's the latest phase of all of that, because company directors can make use of that scheme in a limited capacity. We're going to talk about bounce back loans and the newer business recovery loans. Bounce back loans are now closed, but people who have taken them out might want to consider what the repayment options are. And quick look also at some ideas that are still out there around tax deferrals, particularly VAT repayments, that if you did defer that, repayment schemes that are available. We're also just going to touch on something which is concerning IPSE at the moment, which is business debt related to those loan schemes. As we come out of the pandemic, there's quite a bit of debt out there, we think. Got some relatively recent research to share with you on that one. So let's crack on. The SAYS scheme, some say SEES, I say SAYS, the Self-Employment Income Support Scheme. Now, this is the scheme that was the big kind of flagship scheme for self-employed people. Self-employment to IPSE means people who work for themselves, whether they've incorporated a business or not, whether they're working for a limited company, in other words, or whether they're working as a sole trader. This scheme is only for sole traders. We'll talk a little bit about that in a minute. The fourth grant is now open. You can claim it now. Everyone, you should have received a communication, probably by email from HMRC, inviting you to go online and giving you a date from which you can claim. I think anyone who can claim will have had that date now. They've been open for a couple of weeks. This fourth grant is the same as the first and third grants, in that the way that it's calculated is they look at your historical profits, they work out what the monthly average is, they times that by 3 to give you 3 months worth, and then they times that by 80%. So it's 80% of 3 months average trading profits, as you can see there. There is a cap, as there always has been, of 7,500. It's usually around about, if you have historical profits of just above 40,000, you start banging into the cap. So sort of 42,000 historically, it means that you will hit the cap of 7,500. Now, there is going to be a further grant, a fifth one, and we'll look at that a little bit in a minute. They still haven't published too much details about it. Well, here we are, the fifth grant. So this one, you can claim it from late July. They haven't given an exact date yet. They haven't published lots of guidance, but this one's going to work a bit differently. The amount that you're entitled to is all going to be dependent on the amount that your turnover has been affected by. So not profits, but turnover. They're going to ask you to tell them if your turnover has reduced by more than 30%. You can take a reasonable estimate of this, because many people won't know for sure. They won't have done their accounts, they won't have submitted a tax return. That's why they're doing it based on turnover rather than profits, but they want people to take a reasonable guess. if you think that your turnover has reduced in the last year by more than 30%, you're going to carry on getting that 80% of 3 months, so capped at 7,500. However, if you think your turnover has reduced but by not more than 30%, then they're going to give you just 30% of those 3 months average trading profits with a much smaller cap there. So the most that you'll get out of the grant is 2,850 if you think your turnover has not reduced by more than 30%. We're waiting for more guidance and details about this. As I say, what they're saying at the moment is that people will be able to apply for this grant from late July, but no exact date has been given. Something interesting about both the 4th and 5th rounds, so this latest set of the scheme, is that so-called newly self-employed people are now included. Previously, in grants 1, 2, and 3 of SAYS, people who had started trading since April 2019 were excluded from the scheme. That's because they hadn't done a tax return for the year 18-19 because they weren't trading then. And the way that this works, the scheme works, is they look back at your previous tax returns to make the calculations. Now, IPSE campaigned very hard on several levels to get various different excluded groups included in the SAYS scheme. One of those was the newly self-employed. And what we were able to successfully argue to the government, and not just us, but others, and a special mention actually to the FSB and Craig Beaumont at the Federation of Small Business, who campaigned with us on this one, and we wrote jointly to the Chancellor. We did a piece in the Times together. We were able to persuade the Chancellor to look at the latest tax return to make these calculations. So now you must have filed the 1920 tax return, which meant some people who were excluded, and the government reckoned it's about 600,000 are now included. You have to have traded in the last two. These are more recent questions for the SAYS scheme that they ask you. You have to have traded in the last 2 tax years now. So you have to have traded, and that's before the current one that we're in now. So you have to have traded in 1920 and 20 to 21. You also have to still be trading now, or you would be still trading if it weren't for the coronavirus preventing you from doing so. And you have to, even for this one, so before we get into this worrying about has my turnover reduced by 30%, you are asked to confirm that you reasonably believe that you have suffered a significant reduction in profits. They do have some guidance online about what they mean by reasonable belief and what they mean by significant reduction, but there's none of this sort of has to be 30% or anything like that. That comes in for the next one. It's worth reminding ourselves as well that these grants have always and continue to be subject to tax and NICs. We had a question ahead of this webinar from, I've got it right here, from Anne Folks, who said, do you know of any intention to support those involved in the international travel industry after the rest of the UK industries are encouraged to get back to business? Anne is a tour operator and a freelance international trekking guide, and all of her income is based on summer international travel. And that's going to be at best significantly reduced. So Anne, it will depend on some other things, but you do say that you are a sole trader working from home, you're not paying business rates, etc. So some of those other grants that were available aren't going to be available to you, as they haven't for many, many self-employed people and IPSE members. I think that hopefully you can get involved, you will be able to claim a SAYS grant. That is the best way for you to get some sort of cash in, and you will probably be able to demonstrate that you've suffered, even for the 5th grant, a reduction in turnover which exceeds 30%. So I would encourage you, if you haven't done already, to have a look at this. There may be specific travel industry measures available that I don't know about, but I'm not sure that there are, but it'd be worth looking at that as well. Who isn't eligible for this? Well, if you operate through a limited company, unlike Anne, who says that she's a sole trader, if you happen to have incorporated, excuse me, something stuck in my throat. If you happen to have incorporated a company for your business, you're not in the SAYE scheme. IPSE has campaigned pretty vigorously over the last 15 months now to do something for company directors, either make them put them in the SAYE scheme, or there was another idea that we had that they could make better use of the job retention scheme by allowing their dividends to be considered. We came up with an idea called pay now, claw back later. The Treasury Committee really liked it. The government decided to reject it, unfortunately. There was another idea that was proposed by another group, sort of spearheaded by Rebecca Seeley-Harris, who came on this webinar to discuss this, I think, just before Christmas. It was called the Directors' Income Support Scheme. Essentially, it was set out in a way to mirror the Self-Employment Income Support Scheme, but make it specifically for directors. And unfortunately, that was rejected as well by government, or at least they haven't implemented it, let's put it that way. And there have been other ideas as well, but none of them have come to anything. The government has just not done enough, we believe, for company directors. We continue to push them on this, but as we come out of coronavirus, it feels as if, being completely honest, the government is less likely now than they were, say, 6 months ago, to do something to support this particular group, because they're more focused on opening up the economy, etc., etc. Also excluded are still those that have profits above, historical profits above 50,000. There is no taper. Essentially, if your profits historically and you're a sole trader exceeded £50,000, you're not in. Now, the way they're going to look at that this time is they're going to look at the last tax return, which is the 19 to 20 tax year. They look at that and they say, okay, then if you've got more than 50k in that one, they'll look at the previous 3 as well and do an average over all of those. If your average above all of across all of those is still above 50k, you still do not get inside the SAYE scheme. We've said they should introduce a taper so that people get a bit less if they have historically those higher levels of profit, but they still get something. Unfortunately, that hasn't happened either. And still there is the problem of those people who earned less than 50% of their total income from their self-employed trading are excluded from the scheme. Now, I sort of understand where the government's coming from that one, in that they're sort of saying this is for people who are primarily self-employed. If people have other access to other income, there are other schemes to help them. But I am concerned that, or we are at IPSE have always been concerned that we know lots of people do have a mixture of income. It's not just that they might have an employed job, they might have income coming in from a pension, they might have an investment portfolio, they might have property that they rent out and get income from that. And self-employment still forms a crucial part of their total income. That has been hit during the pandemic, as it has for so many other people, and it seems very unfair to just dismiss them out of hand. It's also worth saying there's a lot of people in this grouping. There's well over 1 million people who fall foul of this particular rule. Again, nothing has changed on this front, I'm afraid. We have campaigned, as have others, and we've had some wins, such as the newly self-employed, but there are these big gaps in support which have persisted. The government essentially has dug its heels in and just said they're not doing anything for that. I don't know if anyone on here caught an interview that the Chancellor did with Martin Lewis, the money saving expert. That was it was shortly after the budget, so it was 2 months ago, and he pretty much said in that there wouldn't be anything for company directors. He said that, you know, the way that dividend payments make it too difficult, as they've said all along, and pretty much firmly closed the door on that one. But we do continue to push the government on this and remind them that they should have done more to help. Now, one thing that company directors can make use of is the job retention scheme, or the furlough scheme, as it's more widely known. At the budget, it was extended until the 30th of September. So slightly exceeding what people thought at the time. People were wondering whether it might be extended into July, but they went to the end of September. Company directors basically are able to claim, but only on the salary element of their income. So if you are a company director, as many are, who take a small salary and take most of your income out as dividends, you're only going to be able to make the claim on that smaller amount of your total income. So while it is something, it really isn't very much, and this is part of the reason why so many company directors feel that they have been ignored. Nevertheless, if you want to do this, you have to have made an RTI submission between the 20th of March 2020 and the 2nd of March 2021. Which did catch out some people previously, but now hopefully will include more people, because some people previously who pay themselves annually right at the very end of the tax year when their accountant says, right, come on, we better make this payment, they missed out because previously the deadline was the 20th of March or the 19th of March. And so they missed out on the furlough initially, but now they can hopefully make use of this. The reason why the 2nd of March is in there as a date is because that was the day before the budget. It's worth pointing out as well that another drawback of the furlough scheme for company directors is that it really restricts what they can do. They basically can't do any work for their business. They're only allowed to fulfill their statutory obligations as directors, such as filing accounts at company's house. Even picking up the phone to speak to a client about a prospective piece of work in a few months' time could be considered to be outside of the rules. Now, quite how HMRC would ever know that you've done that, I'm not entirely clear about that, but those are the rules. I have said in the past, as long as you're not out there earning actual cash, then you're probably going to be all right. I think that was probably a bit flippant of me. It's possible that could land you in hot water, so I shouldn't be saying that. But I would say that definitely would be something that you can't do whilst furloughed. It's also worth noting that umbrella workers can be furloughed. So I know that a lot of people caught up by the IR35 thing have found themselves working in umbrellas. Umbrella workers can be furloughed, but what the umbrella would have to do is essentially it would have to come from the client initially. The client would probably have to agree it with the worker. Let's call them that. It's hard to call them a contractor or an employee. Technically, they're an employee of the umbrella, but they're quasi-employee, etc. The client has to come up with the idea, offer it to the worker has to accept it. The umbrella or the paying company has to then administer the furlough scheme. It's also true that if you are caught inside IR35 by your client, because of the new IR35 rules that we wish weren't there, but they are, your client, and you're being paid directly by that client, then you can be furloughed by the client. The fee payer again has to make, so if you're not contracting directly, if you have an agency in the chain, the client can offer the furlough, the contractor can agree it, and the fee payer has to administer the furlough claim or the job retention scheme claim. But it is interesting, there is a section on gov.uk about this. So that's one thing to look out for. In case anything happens with an engagement that you're in, it might be that rears into view as an option. If IR35 has been deemed to apply to the engagement, furlough is potentially open, so worth looking at. The way that this works is that the government contribution to this is going to diminish. This is particularly important for company directors because they are, in a sense, their own employer. So their employer will have to essentially make a bigger contribution towards the salary as we move through towards September. So basically at the moment it's 80%, capped at 2,500 per month. So similar to the SAVE scheme, basically. They've tried to make the schemes mirror each other. From July, they're going to reduce that down to 70%, but the employer still has to pay the employee 80% of their wages. So with a contractor inside their own limited company, they're sort of the same person, basically. So just be aware, essentially what it means is you're going to be getting less from the government than you were before. Excuse me. And then in August and September being the final month of this scheme, of course we've heard that before, haven't we? But that is currently how it's supposed to be, that it's going to end then it's going to be reduced down to 60%. So it's going to become basically less generous, the furlough scheme. But currently for this month and next month, it's going to be 80%. One thing to note is that at one stage, you couldn't furlough someone who hadn't previously been furloughed. That's gone now. You can now do, if you haven't ever used the furlough scheme, you can now use it. And flexible furlough is still available. So flexible furlough it was something that was brought in after the initial phase of furloughs introduced. Initially, it was sort of like you just had to furlough someone full time. That was that, and they had to go off for a minimum of a month or two or something. I think it was a minimum of 3 weeks. I think it was. Well, then they brought in a scheme that said, no, you don't have to do that. You can have them working 10, 20 hours a week and furlough them for the rest of the time that they would normally have been working for. Contractors can make use of that flexible furlough scheme as well. It enables them to do that little bit of work, to perhaps spend half a day on the phone to clients, sorting out your website, whatever else it might be that you want to do. And that's still available as well, and will be up until the furlough scheme ends, or at least there's no indication that it won't be at the moment. Okay then, and by the way, please do keep sending in questions. I'm going to go through them at the end. I'm going to race through the slides and then hopefully leave quite a bit of time for questions. We're getting on with the slides quite nicely at the moment. The job retention bonus scheme. So I just wanted to talk about this because this at the moment is sort of in no man's land. It's not something which the government have announced they're going to be bringing in. This is something that they said that they were going to do when furlough was initially supposed to end last autumn. So the idea of this is because of it's essentially boils down to the Chancellor's fears about mass unemployment, and economists saying, well, when furlough ends, lots of people will be made redundant and we will have this huge surge in unemployment. So the Chancellor and Treasury came up with this scheme as a way to incentivise companies that, rather than letting staff go when furlough ended, would keep them employed, and then they would get, after 3 months of them being employed after furlough ends, they would get a £1,000 bonus. Now, company directors were always going to be included in this as well. So essentially, if you furloughed yourself from inside your own company, and then you got £1,000. Sorry. If you furlough yourself from inside your own company, and then when furlough ends, you remain as an employee of that company, having a salary which has to be at least £520 a month, which is about where the minimum would be if you were. I think it's slightly higher than that if you're, which a lot of people do, trying to stay under the NIC threshold. Then you will get £1,000. Now, whether or not this comes back will all depend on the Chancellor's fears over the economy and over unemployment. We have said that he should bring this back. I think that some other business groups will call for that. I think that this might rear its head again as we nudge towards the end of September. And so it'll be interesting to see, because it could be quite a nice boost to the economy, and particularly to company directors that have had a very, very tough time of it. If they can go out there and get that £1,000 extra, that could be quite welcome. But you probably wouldn't be getting it until, if I do, so it's October, November, December, basically the end of the year, based on how they had it structured before. So it could change, they might not do it at all, who knows, but it's worth pointing out that they were going to do this previously. Okay. Bounce back loans and the recovery loan schemes. So bounce back loans, lots of freelancers made use of this scheme. It was a pretty generous loan scheme, which was 100% backed by the government. So lenders would lend the money and the government would guarantee the loans. The idea of it was that it would be on very favourable terms, is the phrase that the Chancellor used to like to use. So you wouldn't have to pay anything for the first year, and after that it was 2.5%. Now, you can't get a bounce back loan anymore. They closed on the 31st of March. But we're now getting into the stage where some people who took out these loans are going to have to start repaying them, because that year, that grace period of a year is just about up. They changed the rules on this before Christmas, before the budget last year. And so they extended the repayment period. So it was 6 years, it's now 10 years. And a couple of things to watch out for if you are in the scheme and you are looking at making repayments. Just remember there's a little bit of flexibility within it. You can move temporarily to interest-only payments for up to 6 months at a time, and you can do that 3 times. So you can say, I just want to have interest only, and then you'll obviously it will mean you're building up, a higher debt for later. But that is an option. You can also completely pause repayments for 6 months, but you can only do that once during the 10-year period. But you can say, I don't want to pay anything for 6 months, give yourself a bit of that breathing space. So definitely, if you've taken out a bounce back loan, look out for that. The recovery loan scheme, or business recovery loans, so this has been available since the start of this tax year, so since April the 6th of this year. These are quite slightly bigger loans, so you can get between 25,000 and 10 million, but they will look at your turnover to decide what you can get. The government are guaranteeing 80% of these loans, so lenders are likely to be more cautious about lending these. Also, they're not allowed to ask for personal guarantees for loans which are under 250k, but they don't have to lend it. And we know that from the so-called CBILS, the Coronavirus Business Interruption Loans, that was the first of these loan schemes which came out last year, and they were targeting really bigger businesses, but they weren't very successful. The banks didn't want to loan out the money, even though government was guaranteeing 80% of them. And the bounce back loans came in a way as a bit of a response to that, where they said they guarantee 100%. I have heard on the grapevine that these loans are not flying out the door. That might be because, I'm not sure whether that's because people don't want them, there's not so much demand around as there was this time last year, or whether it's because the lenders don't want to lend. But I think we will soon find out about that. Also, the terms on these aren't nearly as generous, and there's no sort of fixed interest rate like there is with the bounce back loans, so it's up to the lender. You have to start making repayments straight away. There's no 1-year grace period with these. I did know, I've been on to one, I mean, you can shop around by all means, but one place you can go to get one of these loans is NatWest Bank, and they have an illustration on their website. They stress this is not, it might change depending on your circumstances, etc. But they're looking at an interest rate of between 6 and 7%, 6% in year one, and then it goes up to 6 point something and then 7 point something. All of that means that on a loan of 25k, you end up repaying 30k. So it's sort of a 5% essentially is what the interest mounts up to over 6 years. So it's not as generous, but it's not too bad. If you really want one, go and have a look. It is an option, but and actually I'd be really interested to hear. And if anyone's tried to get one on here and perhaps failed, or they've tried and they've succeeded, let me know in the comment section on here. Okay. VAT payment deferral scheme. This is open to businesses specifically that deferred VAT between the 20th of March and the 30th of June last year. So if you're in that period and you deferred your VAT, there is a scheme which is open to you, which says that you can spread repayments over monthly instalments, and you can do that up to 11 months. If you want to make use of this scheme, if you did defer VAT in that period, you have to contact HMRC by the 21st of June. That's the deadline. After that, this scheme closes. It's open now. It's been open since the beginning of March, I think. So just be aware of that deadline if that's for you. Other taxes, they do still have a page on Gov.uk talking about time to pay arrangements. Lots of it is saying if you're 60 days beyond the deadline for paying that tax, then you can't set up such an arrangement. I sense there's possibly, just possibly, some wiggle room in this if you have good reasons for why you haven't paid that tax. You really should have set this up previously, but there's a phone number there. I'll leave it up on the screen for a little second longer, so just make a note of it. If you're worried about making tax repayments, get in touch with HMRC. They might be able to accommodate some sort of time to pay arrangement. Time to pay arrangements basically just mean paying the tax back in instalments over a longer period of time. So it might be worth doing that, but they might say, no, I'm sorry, you've missed the deadline and you're now incurring interest with every passing minute and you have to repay it as soon as possible. Okay. And by the way, I think even in the time to pay arrangements, you do often have to deal with some interest charges, but it just might be better than just leaving it to without anything else. That's sort of the main things that I wanted to cover about what support is available out there right now. Just wanted to mention something about business debt. It's not just the bounce back loans. There are other ways that businesses can get themselves into debt, and many of them we believe have done over the pandemic period. We did some research with Starling Bank. I'll let you just look at a few headline stats from that. We've got a report on that as well available on our website if you want to sort of learn more about that. We are looking to have some conversations with government. We have had a couple of conversations with government about, are there some clever, interesting debt relief policy ideas that we could float out there that could help business? Because we're very concerned about this. You know, the debt can cripple businesses and people. We're looking now to grow the economy to hopefully come out of the pandemic and hopefully enter a period of relative prosperity, good booming times. If businesses are crippled by debt, that's going to really hamper that effort. And is there something more that we can do on this front? There are people who are calling for bounce back loans to be written off, for example. We had someone from, we had Phil Hall from the Association of Accounting Technicians on this webinar before the budget, talking about the budget. And they called before the budget for bounce back loans to be essentially written off or converted into grants or whatever you want to call it. I think that the government showed no interest in doing that whatsoever. They are looking to get the bounce back loans repaid. And also I think it would be rather unfair on businesses that perhaps took the prudent option of not taking out one of those loans if it turned out they could have had all that free money all along. But maybe there's something more nuanced that we can do around not just that, but on credit card debt, overdraft debt, basically debts that are held with banks. Is there something that could be done with the banking sector to help alleviate some of the strain on business? That's certainly something that we are interested in discussing. Okay, so we've managed to race through those slides. I thought it might take me a bit longer. I hope I didn't whistle through them too quickly. I'm going to leave those links up there on the screen. A recording of this webinar will be sent to all of you who are watching and indeed to everyone who registered. And we're also going to put a recording of this webinar in our coronavirus hub. Normally our recordings that we keep on our website are only for IPSE members, but because this one's about coronavirus and about sort of the effort to help people, we want to put this in that hub. You can find a link to that hub on there. And we'd love to hear your feedback as well. We're not ending the webinar just yet, but that QR code that you can see in front of you, if you hold your phone up to that, then that will take you through to our feedback page. And I'd be very grateful to you if you could leave us some feedback. We'd love to hear what you have to think about our webinars and also give us ideas for other webinars and things like that, because we're always looking to do more webinars. I'm now going to go through the questions that we've received. Nigel says, I have received the last 4 SAYS grants, but was alarmed that the latest grant wasn't what I had previously received, but was only £783 as opposed to £1,196 achieved previously. When I query, they advise this latest grant is less as one of the tax years occurs now within COVID and therefore means profits would have reduced. Is this correct? It is sort of correct, Nigel, that they are now looking at that they're now including that I've always got to think about this because of all the way the dates work. It's the 1920 tax year that we just did the tax return for, isn't it? We did that in January, or it was actually delayed, but we would have normally done that in January 2021, right? So the 1920 tax year, they now have that information from that tax return. They previously didn't have that, so they now include that in the calculations. They look at that. Now, if you think about the tax year 1920, most of it was not during coronavirus, but a bit of it was at the end, wasn't it? Because it goes right up to April the 5th. So, April was certainly a bit of a washout last year. When did we go into lockdown? End of March, something like that? But already before that, lots of self-employed. But once it became clear, it became pretty clear sometime during the beginning of March that we were going to have big problems. I think it was around the end of February that IPSE wrote to some ministers saying, we wrote to the Chancellor, to Teresa Kofi, the Secretary of State for Work and Pensions, and to the Business Secretary at the time, who isn't who it is now, she's Kwasi Kwarteng, it was someone different then, can't remember. We wrote to them and said, look, we think there's a big economic crisis coming here. We need to protect the self-employed because employees are likely to receive some sort of protection via their employer, while self-employed people are literally at the whim of the market here, and the market is going to fail, and we need to step in. So it was pretty clear from about March time people were going to get affected, and people did start getting affected from then. So that last bit of your year there is likely that you were hit, Nigel. But most of the year, you may have had a good or bad year, like all self-employed people do, but I don't think it would have been too badly affected by the coronavirus. Forgive me if I'm wrong, but typically that would be the experience. So I'm sorry that in your case, it seems that because they've changed those tax years, it looks like you've received quite a bit less. It looks like you have received close to 400 quid less, actually, haven't you? Which is quite significant because of that change, the way they look at those tax years. But that's just how they've done it. They've looked at these different tax years. You've earned less money, you've had less profits in those tax years, and that's what's impacted you. So I'm sorry that that's the case, but it is. SAYS 5, does HMRC turnover calculation including SAYS paid out? Good question. No. Am I saying that right? I'm pretty sure I am saying that right. They won't consider what you've received in terms of your SAYS grants as part of your turnover. Your business turnover is what your business has turned over. A grant from SAYS is not part of that turnover. I think I'm right about that one, C. I've only got an initial there for you. So I think that's the case. So yeah, they won't, when you've got to think about what's your turnover, how badly has your turnover been impacted, I think that they won't ask you to consider previous SAYS grants. But we are waiting for more guidance on SAYS 5. So let's look out for that. That could come up, and they might say no, they want you to include that. So definitely worth thinking about. SG says, I don't know if you're aware of this, Andy, but I discussed my deferred corporation tax debt with HMRC this week, and they've informed me that they will not waiver the not inconsiderable interest that this debt has accrued during the pandemic. I'm sure others are in the same boat. So yeah, that is an interesting point. That corporation tax, there hasn't been very much talk at all about relief on that and waiving interest, etc. So I'm sorry to hear that they seem to be taking a pretty hard line on that. That they did defer. There were deferment options, I think, available for corporation tax, but it seems as if they've reached the end of that and they are not willing to, engage on any relief from the interest on that. But thanks for saying that, and I'm sorry to hear that, SG. Okay, Bhavani says PAYE freelancers are excluded too. Yes, this is absolutely right, Bhavani. And we pay our tax at source. So how could there even be room for fraud, as the Chancellor suggests? The fraud issue, Bhavani, was all about the newly self-employed people. So essentially they were saying, unless you've already done a tax return and one that you haven't fiddled because of you knew that there was a grant coming, then we can't offer up the grant to you because you could now put in a tax return that could be full of all sorts of false things. They're also really worried about not really individuals, but serious organised crime. That was their real worry about the fraud issue. It wasn't sort of mischievous accountants sort of inflating profits previously, the sort of opposite things what they normally might do, just to be able to claim a bigger grant. They were worried about people, fake IDs, basically fake tax submissions, tax returns, and then mass getting of grants that get squirreled away in some foreign account, etc. But PAYE freelancers are excluded. Yes, it's true. Because they're on PAYE, they can make use of the furlough scheme, but only if they have an employer, which they already have, but an employer who'd be willing to do that for them. Because they are piecemeal workers, they really fell between the gaps. So definitely an area of concern. Greg, limited company directors can furlough claim the small CJRS on it, and you can still trade as self-employed. Yeah, that is true. As long as you're not doing work for your own company. So a company director could claim the furlough, limited as that is, as you quite rightly say, Greg, and then you can go off and get another job somewhere. So anyone who's furloughed, I could be furloughed from IPSE, and then I can go and work for some other organisation. There's no, I just can't work for IPSE. So it works the same for company directors. As long as you're not working for your company, you can carry on working. And although this might be frowned upon by HMRC and could potentially, again, I don't want to say anything that's going to land anyone in some hot water, but you could go to your clients and say, I'm just going to offer up my services now as a sole trader. I'm not working through my company at the moment, so I'm furloughed from it. Technically, I think there'd be nothing wrong with doing that. Bhavani again says, why do you think PAYE freelancers are still excluded from SAYS? Do you have any view on this? It's because PAYE freelancers are on a payroll, and the payroll scheme is the furlough scheme. That's why it's a technical issue, really. That's generally why it is. It's not because the government wants to pick on PAYE freelancers. The government, if anything, prefers PAYE freelancers to other types of freelancers. That's kind of what IR35 is all about. Get everyone on PAYE, but they're still a freelancer. Government's happy with that. So I don't think government has anything against PAYE freelancers. It's just that the nature of the SAYS scheme is all, you have to be a sole trader, and a sole trader is a tax status. You have to basically be paying class 4 national insurance. That's how the SAYS scheme works, and anyone who's not a sole trader is excluded from it. Rightly or wrongly, we say in many cases wrongly, that is how the scheme works. John, do the same rules apply to CBILS loans as those for bounce back loans extended to 10 years? John, I don't know so much about CBILS. I'm going to be completely honest with you, because most of our members and smaller businesses and self-employed people didn't make use of the CBILS. They tended to be targeting more the bigger companies. Now, you might have had one from the sounds of it. I'm afraid I don't know about the repayments over what years. I suspect the rules might be like they're discrete set. It's a discrete loan with a discrete set of rules. So I would have thought that they won't mirror that closely. I would have thought they will be different. But I'll have to look into that a bit more perhaps, and maybe try and get back to you on the CBILS. Are there negative impacts to credit scores if these loans are utilised? Good question there from Nicholas. Now, I'm going to rack my brains a bit here, always a bit of a danger, because I don't have this at the forefront of my mind. I think that there was a mild bit of controversy over this. It was supposed to be the case that you could take out one of these loans and it would not impact your credit score in any way. And I think it is the case that it doesn't impact your credit score. However, if you were to go to try to get certain types of products, such as mortgage products right now from a lender, they might ask you if you've been in receipt of one of these loans, and it might exclude you from certain products. So although your credit score itself won't be impacted, it can affect your borrowing potential, if we could put it that way, for other types of things. They may have addressed that issue, but I think I'm right about that. Certainly, you can expect to be asked about it. Like when you go and get a mortgage, you're asked, do you have any loans? Do you have any credit card loans? Do you have any overdrafts? Blah 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 blah. They will ask you about coronavirus loans, I think, as well. Now, it might mean that even if you say yes, you can still get the product, but they do ask you about it. So, one thing to be aware of. Was interest accrued from day one, by the way? It says SG. SG was SG. Were you who talked about the corporation tax? Right. Sorry. Yeah. So you were getting interest from day one of not repaying that. Thanks, SG. Yeah. Sorry. Just to be clear to everyone else, then. So that was the question that we had about corporation tax, and one of our attendees today is having some difficulties with HMRC, who are refusing to offer any kind of relief from interest on unpaid corporation tax. The interest began to accrue from day one, is what we just got clarified there. D asks, any support nationally or locally in Wales for those excluded from SAYS under 50k profits, or if you had you've used the greater than sign and then you've said under, so I'm not quite sure. But so something about the 50k, 50% profits of income. So this is the 50-50 rule. I think I know what you're saying. So you're saying if you previously were working as self-employed, but less than 50% of your total income came from your self-employment, is there any help for those that are excluded from SAYS nationally or locally? You're sure many others are in your situation. And then there's a complicated set of, so it says 2019 to 2020, PAYE until the end of September. Yeah, because exactly. So I think I know what you're saying. So you spent time in the tax year that you were PAYE, then you quit, went self-employed, and because of you earned more in your employment than you did in your self-employment. I've always said I feel really sorry for the particular group of people that are like this, D, because you took the gamble, you took the risk, something that many people, including IPSE, really admire when people go out and strike out on their own, pursue a dream, have a business idea, try to follow it through, and then bang, you got hit by the pandemic. And because of the way the schemes worked and fell, you ended up with even less, much less than you would have done if you just carried on being PAYE and possibly got furloughed or carried on just working, and much less than you would have done if you had been self-employed a bit earlier and possibly been able to make use of the schemes properly. There was something in Wales, to answer your question properly. Wales, like Scotland, came up with its own local scheme to help people that didn't make it into SAYS. Wales had some business grants that were available even to businesses that didn't have premises. I'm not sure on the status of them now, Dee. I will try to look into that. Might do some sort of follow-up blog piece or some sort of guide in our coronavirus pages, so keep on checking in there. So I'm afraid I don't know the status. I know that there was something. Wales did have a more generous set of rules than England, but though some local authorities had some other specific help as well. There has been local help available. The local authority grants that were made available, it was a bit of a postcode lottery, and a lot of that money ran out quite quickly, is our experience with those. There's none of that available now, I don't think, in local authorities. I'm not sure about Wales and Scotland, and indeed Northern Ireland, I'm not sure. Greg says, I spoke directly to HMRC technical teams 3 times and they confirmed that you can furlough from limited and work as a sole trader as long as you are not working for the limited code. There you go, Greg, thanks very much. Yeah. I think that's absolutely that is absolutely right, as I was saying, and it just strikes me that they might take a dim view, but I think there's absolutely nothing wrong with it technically, and you've had it confirmed from HMRC 3 times, so there you go. Then that is fine to do that. And just to remind everyone else, this is the question that said, or the comment that said, you can furlough yourself from within your own limited company as long as you don't do work for that company. You can go and work as a sole trader. And that's okay. C says, FYI, thanks Andy for response on SAYS 5. Appears to be some debate in my network and anywhere on exactly what HMRC will finally do. I'll now have to awkwardly go back up to remind ourselves what C. Sorry, C, I've forgotten what your initial question was about. I remember seeing a name. Oh yes, that's right. Yeah. So this was the question that was all about, if we're looking at if we now have to make this decision on our turnover, right? How much turnover has been reduced by? Do we have to factor in that we've had some money from SAYS? So, for example, if your turnover in each of the last 4 tax years was £10,000, to keep the math simple, and this year it's going to be £6,000 900, then you're more than 30% reduced. But if you've received, say, £3,000 in SAYS grants over the course of the year, that's going to mean it isn't reduced. So how do we factor that in? We're going to have to wait and see. Bit of a debate, says C, within his network on what HMRC are going to do about that. Yeah, I don't think they've made it clear. That's exactly what I think. We should be getting a bit more guidance on the 5th round of SAYS fairly soon. The other thing that always seems to happen with the SAYS grant and the furlough scheme and everything else that's happened in the last year is that these schemes change all the time. The more astute amongst you might have seen, I didn't reference it, but in my opening slide, I said when I said what we're going to cover in this, I left something in from before which said the job support scheme, which is actually not the job retention scheme. The job support scheme was this whole other complicated scheme that the Chancellor announced was going to come in when the furlough scheme ended, but then didn't do it and just extended the furlough scheme anyway. IPSE had to get our heads around this job support scheme. How's that going to work? Company directors make use of it, can sole traders make use of it, etc., etc. But they didn't even do it. It's just gone away. So Stage 5, they've said this thing about the 30% reduction in turnover. Maybe that will change. We'll have to wait and see. John says he did get a Sybil's. This is the coronavirus business interruption loan, and this was before the bounce back loans were available. Okay, this is really interesting, John. And we were not able to convert it. If you can get back with any info, that would be fantastic, John. I'll try and do that. We're a small 2-person company and not a big organisation. Yeah. That's a really interesting case, John, and I hope that we will discover, and I will try and get back to you, that there are some agreeable terms here comparable with the bounce back loans, because you're absolutely right. The Sybil's came out first when there was no suggestion there was going to be a bounce back loan, and the idea and the government were very clear about this at the time. They said this is for the very smallest business, the very business. So if you're having trouble, come and get a Sybil. And the term, and then they brought out the bounce back loans because there were problems with the Sybil's. Basically, they weren't getting out the door. It seems, John, that you were one of the people who did manage to get your hands on one fairly quickly. But what are the terms of those? I know less about them. I'll try and come back to you. Goppy says you can only claim CJRS if your company is adversely affected by coronavirus. You can't claim CJRS because you have actively decided to defraud the government by taking your limited company clients into a sole trade business just to get 2 sources of income. This has surely got to be fraud. No, Goppy, that is right. I don't think that's what we're saying at all. We're just saying that if your business has been affected by coronavirus and there is no work for you as the sole fee earner inside that company to do, you can furlough yourself within that company. You can, though, then go and do work elsewhere outside of that company. That is how the rules work. Now, if you go back to the same clients as a sole trader, that is obviously, that's what I'm saying, it is slightly maybe against the rule, but I think technically there's nothing really stopping you from doing it. I'm not sure if it's fraud. You probably have to get a lawyer in. You could probably have quite an interesting and lengthy legal case to decide that. But yeah, I take your point, Goppy. I do take your point. So sorry, yes, under 50%. Yeah, that's it, D. Yeah, that was just the question I had from D over the 50% split on income from self-employment, income from elsewhere. Okay, we're getting towards the end of this now. C says, when Small Biz UK was affected by coronavirus, those with clients outside of UK saw many effects during late 2019 and early 2020, period of the tax year 19 to 20. UK, yeah, I think C's making the point there. I was saying earlier on that, well, you know, here in the UK, we weren't really too impacted by the coronavirus lockdown and all of that until, you know, middle of March. But of course, many people have clients outside of the UK. So if you were, particularly if you were trading in, you know, for example, Far East or Southeast Asia, then you were clearly impacted well before that, because that's where, you know, we were hearing those reports well before Christmas about, you know, lockdown measures going on over there. And John says, thanks very much. Well, look, that brings us to the end of the questions. So it's nice, actually. It's really, really nice to be able to go through all the questions in turn. And we've almost used up the full hour there. So look, thanks very much for tuning in today. And I've really enjoyed going through the questions and having more time to spend on that. I hope you found this useful. Do check out our Coronavirus Hub and do leave us some feedback. I'll give it another minute. I'll leave that up there after I sign off for a second. Yes, thanks very much for joining us today. Thank you. And I hope that everyone has a much more prosperous rest of this year than we've seen over the last few months. It's been an incredibly hard period. Thanks. Bye.